Breaker blocks, one of the most underrated tools in smart money trading. I'm 𝗀𝗀 from Spektrades, and in today's video, I'll teach you step by step how to identify and trade breaker blocks. Stick around for live trade chart examples that'll bring this concept to life. Without further ado, let's get straight into this video. What are breaker blocks? A breaker block is an invalidated order block. It occurs when price moves through an order block and reverses, breaking structure in the opposite direction. Why are breaker blocks important? They signal smart money shift in market direction. Breaker blocks act as a key area of support/resistance after a reversal. As we can see here, after price rallies higher and give us a breaker structure, price will then pull down lower and reuse this breaker block right here as support now to keep pushing this bullish trend. Some key characteristics is that it can be found after a liquidity grab. There must be a breaker structure in the opposite direction. Price often retests the breaker block before continuing the trend, exactly just like I stated. As you can see, price push down lower, give us a liquidity sweep, and then rally higher and give us a firm body breaker structure. This right here is our breaker block. We're just going to extend it out. Now we can expect for price to pull back and reuse this breaker block right here and then continuing our trend. How do they form? Price reacts to an order block. Instead of respecting it, price breaks through it. The order block becomes a breaker block, indicating a reversal. As we can see, this is supposed to be a bearish engulfing order block. Price is supposed to use this to continue the bearish trend, but we see that price violate this order block right here and run through it. Then price is going to come back and retest it to then continuing our bullish trend. A quick tip is to use breaker blocks in combination with fair value gaps or market structure shifts for precise entry. As you can see, there was a fair value gap aligned with this breaker block right here. This right here is what we call a unicorn model. It is extremely powerful. Now let's get into identifying breaker blocks on the chart. First, we're going to go over on how to spot breaker blocks. The first is to identify a previous order block that price interacted with. Second is to look for a strong impulsive move through the order block breaking structure. And third is to mark the area where the order block was located. It becomes a breaker block. As we can see here, the first thing we're looking for is for price to just show us a clean liquidity sweep, just a clean liquidity sweep. We see that price push down lower, give us a clean wick low of this lows right here. This is what we call a liquidity sweep. Then we see that price rally higher sharply and breaks through this old high right here. This last bullish candlestick before price started pushing down lower is our breaker block. Then we're going to extend it out. We see that price push down, tap right inside of that breaker block high, then extend higher to clear old highs. Now for the rules for using the breaker blocks. They must occur after a liquidity sweep or a stop hunt, breaks market structure to the opposite side, price retests the breaker block zone before the trend continues. Now let's go over using breaker blocks and trading. Right here is for our trade setup. First, we wait for a clear breaker block formation after a market structure shift. Then we enter on the retest of the breaker block zone. We use lower time frames such as the 5 minute, 15 minutes for precision entries. The entry criteria is price retest the breaker block zone. Then we look for confirmations such as rejection wicks and bearish engulfing candles. For the risk management in our stop loss, we'll place it just outside the breaker block zone. For our take profit, we target liquidity pools or key levels further along the trend. A clean bonus tip, just like I stated, is that we use breaker blocks in tandem with imbalance zones to increase the probability of success. Now let's go over this chart depiction right here of our breaker block. As we can see right here, this is just a clean schematic of one of our market maker buy models. As we see, price was just building liquidity in this range right here, and then price pushed down lower and give us a clean liquidity sweep of these old lows. Then we see that price rallied higher and give us a firm body break of structure, just like I stated, a firm market structure break. Right here we got a market structure shift, but right here we got a market structure break of this range high. But as soon as price give us a breaker structure of this swing high, this is our breaker block. Then we see that price pull back right inside of this breaker block open, and it was aligned with a fair value gap. And right in that entry, we place our entry, market execution, and then we're rallying higher to clear old highs. And just like I stated right here, there are more re-entries. Price left us this fair value gap, and then we can see that price purge down back inside of this fair value gap, retest it to then extend higher. But this main trade right here started from our breaker block. Price gave us a consolidation zone and then push down lower and give us a liquidity sweep of these old lows, then rally higher and give us a breaker structure. That last bullish candlestick, this was a lower time frame breaker block, but that last bullish candlestick is our breaker block in a bullish format. We just extended it out, place our entry stop loss at old lows to be safe, and we're just extending to higher prices. Now let's go on the charts and see breaker blocks live in action. First thing that we're looking for is our liquidity sweep. As you can see, price has just been building orders inside of this tight range right here. We're just gonna put this range inside of a box perfectly right here. Price has just been building orders above and below this range right here. So a lot of stop losses are hiding above this range and below it. Then we can see that price rallied higher and give us a clean liquidity sweep of this old high. Perfect. This is the first thing that we're looking for. This is like the prerequisites, right? That I stated. So the second thing that we're looking for, just like I stated, is a breaker structure of the low that went higher to give us that liquidity sweep. So we seen that it was these old lows right here. You can either use this wick or this wick also is perfect. So now this right here is our breaker block, the last bearish candlestick before price rallied higher and give us this liquidity sweep. So now we're just gonna grab a box and extend this out. Perfect. Make this green. This is our breaker block zone right here. Just like I stated also, if we see a breaker block align with a fair value gap, that is perfect too. So we can place our entry right at the breaker block low, stop loss at the candlestick high, right? Just to be safe, preferably at the candlestick high. And we're targeting old lows, recent lows. We can place our target right here. Perfect. This low right here was the main trend. Price started here, rallied down lower, respected it, and then started pushing higher. So we can expect for price now to come back lower and clear this old low. Now let's play price and see exactly how this trade played out. Now we see that price pull back inside of our breaker block. Now let's see if we can get this clean extension lower to come and clear this old low. And also we see that price mitigate our fair value gap. Just like I stated, a breaker block and a fair value gap is extremely powerful. And boom, as you guys can see, price cleanly pushed down lower to come and clear our range low. Now let's look at another example of a breaker block. Now we are on NASDAQ on the 15-minute time frame. As you can see, this is a bullish breaker block. We're looking for price to pull back down here now to retest this zone to continue to the uptrend. First, we're looking for this liquidity sweep. We see that price push down lower to clear this old low right here. And then the second thing that we're looking for is for price to violate a order block. We can see that this order block right here was supposed to hold to push price lower, but we can see that price purge right through it and give us a firm body breaker structure of this old high. That's number two. Then we want to expect for a retest of this old high right here. And also if we see a breaker structure align with this breaker block right here, that is extremely powerful. We see that right there. So we can place our entry right at the breaker block open and stop loss right at the old lows. And we're targeting previous old highs perfectly right here. Now let's just play price and see exactly how this trade played out. And boom, as you guys can see, price push down lower, mitigate our breaker block, align with our fair value gap to then extend higher to come and clear opposite side of liquidity, our buy side liquidity. If you're interested in the full PDF of this exact video of me breaking down the breaker block and the full strategy, make sure you check out the first link down below and join the Spark Trading community, where you get the full PDF of every video and where you get access to a full 4-hour free course and a free trade community. So make sure you click the first link in the description to join the Spark Trading community. Well, this is it. Make sure you guys like, comment, and subscribe. Spektrades out.